Well, this is not good for Australian industry. Hot money is flooding into Australia looking for high interest rates and pushing the Aussie dollar ever higher. Today it got to 105.73 overnight and just dropped back to 105 at lunchtime. The previous high of $1.10 US seems to be within reach the way it's going. Now here's a graph of the Australian dollar index back to the float. It's weighted according to trade volume, so it's the measure that matters for business. In 3 years, we've seen a 50% appreciation of the currency. Great for consumers, not so great for those trying to make stuff in Australia. As I mentioned, one reason is the hot money. Another is rising commodity prices. Base metals are up 10% since the start of the year, gold 7%, silver 16%. They all had another strong session last night. Global share markets were relatively quiet as various luminaries queue up to say how rotten things are. The managing director of the IMF, again, and now the head of the World Trade Organization. Hands everywhere. The local market was dead flat. Retailers were sold and CSL had a bad day, don't know why. Toll and Newcrest were among the biggest gains and the banks and resources leaders all had small moves up and down. An interesting correlation has broken down. Up to a couple of months ago, the German share market and the Australian Resources Index were moving in tandem because the key influence on risk appetite was the European economy. Lately, German shares have been rising pretty strongly as investors have become less worried about a catastrophe in Europe. But the Australian miners have not followed because the Chinese economy is weakening. And that's finance.